Well, crew, this is it. The final market update for 2021. And as we sort of reminisce on the year that was and the year that will be next year, first and foremost, I want to say thank you from the bottom of our hearts for your support this year. It has been a real pleasure serving you and showing up every day to do this for you. We do this because we love to see you succeed, even more so than ourselves sometimes. And to sort of serve you guys brings us real joy. So thank you so much for your support this year, for the likes, the shares, the comments, the charts, the camaraderie, the genuine friendships that we have built in this Discord community. Ones that we'll remember for a very, very long time. So let's get the mushy stuff out of the way and get into the 2021 final UTG market update. For the final time, hit that like button, hit that subscribe button, turn on that notification bell icon, and get updates every time that we go live here at UTG. There will be some fresh content coming over the Christmas period. I'll do some updates in terms of fundamentals and things. If I see anything that's noteworthy, I'll pop it in here for you. But from Ads and I, bro, you are already off enjoying your holiday. Enjoy that, man. You really, really deserve that. And I'm looking to some much needed time off to heal the mind and heal the body and come back fresh next year in 2022. And no doubt 2022 will be the biggest year for UTG, for fresh content, for everything that we do here ever. I'm very, very excited to continue this journey with you guys next year. So, all right, let's get into this BTC, the update that I did last week. I said to you guys, this market looks grim. There is really nothing to me that was bullish about this market whatsoever, hence the reason why I've still remained very heavily tethered since about 64K. Even playing some of these swing moves for myself, it's just not really worth it. I really can't be bothered with it. I don't want to be stressing over whether my entries got hit, whether my profits got taken. The odd one I've jumped into, but primarily, especially this weekend, after anticipating what I thought would probably be a little bit more volatility than what we've seen. We look at the last 2 weekends where we've had massive dips and crashes and market liquidations left, right, and center. I'm not sure if I was expecting that much this weekend, but certainly I was expecting a little bit more volatility coming into the weekly close today. Asia getting a little scared, dumping. We know we've seen Huobi selling off a lot of their inventory as China really starts to crack down now on the Chinese exchanges. But all in all, the retail selling pressure is diminishing a little bit. The on-chain metrics are showing us that the retail pressure is slowing down from a selling standpoint, but the accumulation is still taking place. We've got the likes of Michael Saylor and the guys over there still buying ungodly amounts of BTC at this point. We can see that there's still quite a number of Finex bids layered from really sort of 46 down to 42, 40 sort of 40 odd K, right where I have this phase E Wyckoff final capitulation last shakeout point. We saw down here, typically when we see big wicks to the downside or big wicks to the upside, massive sell-offs, we tend to see price, at least anecdotally from my experience, we tend to see price travel in the direction of the most violent wick that we have to the upside or the downside. So when we saw this move to the downside here a couple of weeks ago down to that 42K level, unless we saw some pretty aggressive buying action from this point and a continuation past these previous highs before we had this BART, I wasn't overly confident of us continuing to the upside. Hence the reason why I started posting a little bit more information about this, going back to the 15th, 5 days ago now, where I was anticipating continued moves to the downside back towards that 42K demand zone. Did I mention off track a little bit? But if you aren't trading right now, you really should be learning. So go to unitytradinggroup.com. You can go to check out all our indicators, our guides, our podcasts. There is literal gold dripping from this page here, and it's all completely free. So enjoy that and get into it. But yeah, totally. As it stands right now, I'm still of the mind that we continue down towards this phase E of our Wyckoff distribution schematic, which leads us back down towards that 42K zone. Now, as I said inside the Discord, there's two scenarios, and I hate to be that guy. I'm still of the mind, as I have been from all the way back up here when I started drawing this Wyckoff, that 42 was on the cards, or at least if 54 didn't hold, whereas I kind of thought 54 would be our last point, then looking at the structure to the left-hand side, then this sort of return down towards this major demand zone would be the next likely thing, as I've been saying for the last sort of few weeks. So as it stands right now, we've got two scenarios. We either blast straight through 42 and we have a really violent wick to the downside at 38. I'm not seeing that too much. Or we just slightly front run that 42 or 40K demand zone, which I think is maybe the more likely scenario. Looking at the Finex bids at the moment on the heat maps, as I said, you can see that there's some buys layered from here pretty heavily down to 42K, which would line up really well with this demand zone. So for myself, who's someone who's heavily in cash, that's certainly a region where I will be looking to place some bids. Definitely. I think we've had a massive sell-off. You know, would we have thought all the way back up here at 68K that we would see BTC prices back down around 44K, 42K? There's no way that we thought that was going to happen around, let's say, around this initial point. When we started seeing this Wyckoff schematic, which I thought was a more of an immediate reaccumulation, I thought that we definitely would see the sort of the 50s or the 54s, which we did. But this level, no, at that point I wasn't anticipating it. I was a little bit more bullish on BTC. Certainly from a weekly standpoint, you know, we are still bullish in this market, right? We are still bullish in this market as long as we hold this 40, 42K zone. If we break below that and head back down towards the 20s, I'll be a little bit nervous on crypto market as a whole. But as we come towards the end of the year, the Forex trading, the traditional market tradings are winding down. Retail traders are winding down. I'm still of the mind, as I said this morning inside Discord, that we would be more so looking towards a January, let's say, bottom or an accumulation sort of zone where we may in fact just range between 42K and 50K for some sort of time before we find a bottom where the whales will be accumulating in this zone. The retail traders will catch on, the rest of the traders will catch on, we'll come back fresh next year, and then we would likely see a marked bottom from that point, and then the market can returns back to the mean up towards the top of this range. And I said that a few weeks ago when I was talking about this Wyckoff zone, and would the whales be buying these zones? Yeah, of course they would be, because this is the capitulation from a retail standpoint that the whales want to see, for them to distribute into the late buyers and then to be selling into the late sellers. It's a market that repeats time and time again. There are enough foolish people in this market. I was certainly one of them. I'm sure you were too, where we were that person. We were buying up here and we were selling down here. We were buying the whales sells and we were selling into the whales buys. It's a very, very rinse and repeat sort of cycle. So looking as it stands now, and as I posted this one the other day, we were still making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And my thought process is that should we not hold this level where it is here, we'll head back down towards this lower low period. So if we look at this sort of like, I guess, a pretty valid descending structure now, at least down towards that sort of 45K, towards that 44K zone seems pretty valid for this particular formation. Formations are subjective. I know, again, this is an N of 1. When I trade these formations, they're usually pretty profitable, but that's given the circumstance of a more bullish environment. We're in a volatile market at the moment. Retail traders are scared. The fear index is off its head at the moment. And this is the point where, as I said this morning, happy to stand back, let things play out, jump in a few, minor spot buys, wait until we get a more of a marked bottom, and then see what happens from here. If we go over to Ads's chart, looking at the accuracy of Unicon here on the 1-day time frame, giving us the entry down here at 49K, giving us the exit up here at 60K. The accuracy of this has been absolutely unbelievable. And from an MA standpoint, I'm a heavy MA trader. Certainly, unless we were to break above this 200 MA, I would not be interested in trading BTC whatsoever. So as we go down towards the higher time frames, the 2-day time frame, we can see that this 200 200 moving average, which was the support network for this particular wick, lines up very well around that 43k zone. Our oscillators, being our steamroller indicators, headed down towards an oversold territory, and our RSI still has a little bit of room to move. If we go back in the history of it, we've not really gone below the 30 RSI since the 11th of March 2020. And that was a heavy day of selling on that particular day. I think that was that sort of black swanish event that we had where we did like, yeah, that was that day. So it's not been since then that we've had an oversold index on our RSI of more than 30, even in these bottom marks here. Now, see, if we look at this formation here, this is certainly something that we could see, where we see a double bottom, perhaps even a triple bottom at this area, before we see any form of move to the upside. So looking at that demand, there's a lot of strength in those demands. Certainly from a one-day standpoint, there's quite a fair bit of strength here in this demand. Certainly the whole way down, this is the best demand zone that we have, the highest quality demand zone that we have. And looking at our steamroller, our gravy train indicator, which gave us the stop short or the stop long signal again at 60k, we're just getting continuous shorts at this period here. So let's have a look at our 2-day time frame, see where that aligns. So there's a lot of confluence there at that demand zone, and our indicators are not the be all end all, but they've proven themselves right time and time again over the last couple of years. So we're getting there, guys. We're getting there. We're getting close to a bottom. I can feel it. We're seeing alt starting to run. We saw XRP today. Sol had a little move. AVAX has had a little blast lately. What else have we seen? EOS had a bit of a move as well. So there's enough confidence in this market for buyers to be sucking up cheap alts and be having temporary runs. But again, it's the nervousness of those traders that sees you make short-term profits and then we head back down again. And that's why I was a little nervous when I saw people inside the Discord saying they were loading up on alts this weekend. But you know, some people need to make their own judgments without our influence. All right, so let's get into FUSD. Looking at where we are now on the daily time frame, it sucks to see this for ETH, but on the same foot, it's great for me to see this with ETH because I'll just load up a gig along when we when we bottom and away I go. Again, this is the best quality demand zone that we have within this particular region for right now, and again, it aligns with our 200 MA, this previous wick, and this demand zone. And also our gravy train bottom as well. If we put it on from an Ichi standpoint, yeah, there's a lot of confluence here. So, you know, we're seeing a pretty beautiful edge to edge here now on Ethereum. So if we just take our MAs off as well, we can see that we had, and this is using our Unimoku indicator, which you can find over here on our indicators page, as is everything else that I trade with. You know, we saw that we had our baseline and conversion line rejection here at this 4134 level on the 13th, so just last week. A heavy rejection, a return to the top, a retest of this cloud zone. This is textbook edge to edge work on Ichimoku at the moment. It could not be any more perfect than that. Beautiful top. And a head down. So looking at it from where it stands at the moment, obviously we've got a little bit of support here at our base, at our Kumo cloud, and then as it stands here, we look for the flatter levels on our Kumo for levels of support. So as it aligns there right now, these are the levels that I'm interested in, and it lines up perfectly with Ichimoku. So again, still no unicorn buy signals whatsoever. We're only seeing MA resistance above us at the moment, and there's nothing here below us. One thing that is slightly interesting as I go to my chart here, nope. Here we are. So again, what we saw here was this gorgeous parallel channel that we have seen and I've shared on so many assets: XLM, XRP, Ethereum, ICX, so many charts that were showing these parallel channels that were respected so well that I've been playing off and sharing with you inside the Discord since, back in early November when we had this top. So as it stands right now on the daily time frame, we're now also seeing a sort of a descending structure, which is pretty valid to me. Again, as I said, would I in under normal circumstances, we'll just tighten this up a little bit, under normal circumstances I would take this trade all day long, but due to the volatility of the market at the moment, I'm just not too sure. So I'm happy to stand back. Gravy train giving us the short signals all the way down as we go towards the daily time frame. As I said to you, a lot more confluence around that 200 MA and let's sort of say that 3500 level. So let's see what happens around here between 3600 and 3450, 3500. If we break that 200 MA, then what I would expect to see would be this type of price action where we've never really deviated too far from the 200 MA before a return back in towards a channel here between 1743 and 2342. So if that were to happen, I'd start getting a little nervous, but certainly I'm happy to see Ethereum and BTC continue to the downside. And again, it just goes back towards my thought process of January being more of a level where we will see a little bit more of a confirmed bottom. Let's go towards the BTC Dominance as I look to wrap this up now as well. Again, here we are again. We're at this demand zone that we've spoken about so many times before. We've double bottomed from here. Double bottomed from here. Again, still quite a fair bit of MA resistance above us. Our MAs are pointing down. Gravy train is giving us the short signal from here. Even though you can't really use indicators so much on a dominance chart, but certainly from a moving average standpoint, there's nothing too telling here of any sort of recovery at this sort of time. Yes, we've made a slight higher low here, but there's too much above us for me to be confident of a BTC rally at this stage. We could just flounder around here for a little bit before anything confirmed happens. So that's kind of where it stands at the moment. Leading into 2022, my focus is going to be very, very heavily on metaverse tokens, on metaverse as a whole. I really think that we've had NFTs which absolutely serve a purpose, and they will be fundamental throughout many, many facets of life and industry over the coming years. Undoubtedly, there's no doubt about that. But metaverse is massive. I think it will dwarf any sort of NFT market that we see once things really start to roll. So you start looking at your Manas or your Monas, I can't remember which one it is, your sand tokens. Even on outside of metaverse, Sol will continue to be a big token in my opinion. AVAX really has shown its strength over the last 4 or 5 months. BNB, of course. ADA, I'm really losing faith in. XRP, we still continue to have the ongoing SEC stuff. So once that is cleared, which I feel it will be, XRP will be fundamentally very, very strong from that point. Of course, BTC and Ethereum. LTC really disappointed me. I put my faith in that, thinking it would be better than what it was. Yet again, I've been disappointed by LTC. I'll continue taking the trades on it, but my hope for the dinosaurs is lingering. So that's really it. I'll continue to sort of provide some updates if I see merit in anything with you over the course of the holidays. But as I mentioned, and I really mean this, thank you so much for your support of us and UTG. It's really nice to be able to come in here and show up for you guys all the time and see the stories and the DMs that we get, and everything that happens in that Discord. We don't take it lightly. So truly, to you watching this, thank you so much. I hope you've had a really beautiful year and you get to spend time with your families and loved ones and unwind from this market. Have your stink bids set just in case we get some craziness over the course of the holidays. But you know what? I think it's time for us to kick back, relax, spend time with friends and loved ones, put this year behind us, and start fresh again in the new year. So honestly, from Ads and I, thank you so much. I appreciate you so much. And this is Tex signing off for 2021. Take care.